And we are live, folks. I'll just wait for a few of you to hop on board. Apologies for us being a little bit late. I've got lots and lots of articles to throw around today, lots of charts to look at, and I want to go through questions and comments with you guys. So I'll just wait until a few of you start popping online. And hey, Regan, how you doing? If you can hear me well, see me well, smash up the like, send us a comment. If you have any questions about what's happening around the world, feel free to reach out and send the messages through, and I'll do my best of pulling apart what is happening in the world that we live in today. I'm very, very excited. A lot of people there, a lot of people out there will be freaking out. A lot of people will be losing money. A lot of people will be losing sleep. This is like, I actually got asked, someone asked me today, or a few people have said, Nathan, you don't look so stressed today. And I'm like, I'm so happy, right? And one was like someone in my house that one of my staff that goes to my house, like cleaners and stuff like that. And they're like, you're so happy today. Why are you so happy? And I was like, I don't know, I'm just normal, right? And I said, the whole system's collapsing. It's fantastic, right? So there's going to be winners, there's going to be losers, there's going to be a whole lot of pain, a whole lot of opportunity. Just make sure that you're on the right side of the bet. That's whatever the decisions that you're taking moving forward. So just go through a couple of your comments here. A lot of howdies. Hey everyone. Sam says here, excited today. We would love to hear your RBA/inflation predictions over the next 24 months. The fun is coming soon. Got the popcorn ready. The ASX 30-day interbank chart is dropping like crazy. Very much so, very much so. So I can see the viewers are piling on in. If you're tuning in, we're just getting started. I am so excited for what we're going through. Is this the crash of all crashes? Is this the big event that's happening? I don't think so. Like they've got a lot of resources right now to they've got a lot of resources to get these sort of situations out of the ground. They've got the plunge protection team. We look at the ASX today, it's turned green, and the US stock market's turning green, and it's just all of a sudden what changed for everything to turn around. This happened in 2019 as well. This happened from about March, April 2019. It actually happened in October 2018. Yeah, it happened October 2018, and I said it would happen by that date, and it happened, and it didn't really trickle through for another 6 months later. And in around September, it was actually September 11th of all time, right? Fancy how they play on numbers there. September 11, 2019, the banks in America, the US banks, had one of them had gone bankrupt, and the repo market, which is repo in our world is, repossessions or whatever, but no, it's a repurchasing agreement. So the banks, when they close at the end of the day, there's when you put your money in the bank and you transfer it from one bank to another, it takes 3 days or 2 days to clear. For that cover, they do, settlements of short-term settlements, and the New York Fed had to step in September 11, 2019 with a repo package, and they had to do the repurchasing agreements at the back end. And that occurred for a good 4 months or so, and then suddenly, allegedly, someone ate a bat, and we got dealt with the next stage of the financial collapse. And I want to run through and unpack all the data I'm looking at the moment. I've got a desk full of pieces of paper. I'm going to throw lots of things around, and I know people go, I love when you throw things around. So we'll get into that shortly. But I remember in February 2020, it was one of the best times of my life. And that whole 2020, 2021, amazing time. And I remember at the time I said beforehand it was going to happen, and people wrote, "You're off your head, stop doing drugs, whatever," and it happened. And then I didn't sound so stupid after all, and it's happening again, and it's exactly what I said would happen in 20. This one here I said would happen in 2022, around May 2022. I said that we would see when interest rates do rise, I said they can't raise them more than 0.5%. And the reason why I said they can't raise them more than 0.5% is if they raise them more than 0.5%, then the whole system would implode. And all the information out there now is showing they've been in recession for 18 months, right? So it's kind of funny that data, is way behind now. So where do we start? Let's just jump in, right? I've got a few little posts here of a few things. So Sam said here beforehand he'd love to see my predictions for the RBA holdings. It makes me laugh, right? Because all these people go into forums and stuff like that. Interest rates going to go up today. They're going to go down. They're going to stay stable, right? And there's no fucking chance that interest rates are going to go up, right? There's no chance, right? They've exhausted all of that. The system's falling apart, right? When will they drop the rates? I said it about 2 months ago. I said it won't be the next one, which was today. It'll most likely be the one after that. And surprise, surprise, here we are today. I don't even know. I didn't even look. I don't think they've dropped the rates. I literally haven't looked at it, right? I've got so many other things to talk about. But I feel like we're on the eve of that. And over the course of the next 6 weeks or whenever the next time that they'll meet, there will be more wheels falling off these carts. So whilst everyone is watching the Olympics, watching the bearded female and the blue fella, which, if you know, it's a gin. Some people say it looks like a Smurf, but they're all still gin. It's just interesting. The symbolism that they're putting out. The people who are watching the Olympics, blindsided to the fact, they're blindsided by the fact that here we are, in the middle of, you go to news websites, you see Kanye West's missus was naked at a restaurant. You see the Olympics controversy. You see some other rubbish, right? But you ain't seeing any of this stuff that we're about to see. We're not seeing, they go, oh, interest rates may go up, and interest rates are just, it's all a joke. Anyway, this one here, Twitter post. This is from Zero Hedge. So Zero Hedge is a mainstream media sort of respected sort of firm out there. Circuit breaker triggered for the Nikkei 225 futures. Nikkei futures trading suspended after touching the upper limit. Stock markets are starting to crumble, folks. That is from Japan, Japanese stock market. I'm just reading through charts and then we'll get into news articles. Here we go. Breaking, bond markets are now pricing in a 60% chance of an emergency interest rate cut within 1 week. This would be the first emergency interest rate cut since March 2020 during the pandemic. Bond markets are saying that something is broken. Oh, no shit, right? That's what we're expecting. And I've been waiting for this, folks. I've been waiting for this. And a lot of people are going to go, oh, stock market is, and like, people are going to watch TV, they're going to be brainwashed and all that sort of stuff. But those of you that know what's going to happen, they're going to print a lot more money. I was talking to someone today, and one of our viewers here, they may be online, and about inflation and just, the triggers of inflation. I was thinking about it a bit when we were talking, and I said, if we look at they can just keep printing their way through this, right? But every time they do this and print their way through it, it causes a bigger issue. And the bigger issue that I see is, if we go back to 1992, we had the recession we had to have, right? And I'm not going political here about any prime minister because it was bigger than them. But there was a $98 billion debt, and Australia was in a recession we had to get ourselves out of for basically 10 years to cover $98 billion worth of debt. As a nation, we've taken on $1 trillion worth of debt in the last 3 years, all within 2020, 2021, that we took that debt. And that debt was at 10 basis points. 10 basis points is $1 billion a year in interest that the government has to pay. It's an expense in their balance sheet. 1 billion, who cares, right? The government's got a lot of money and they'll just find the cash flows from somewhere. But when the interest rates go to 435 basis points or 4.35%, the debt bill, the interest bill goes to $43.5 billion a year. So if we look at that, the interest today in 2024, 2 years worth of interest is what was the whole debt of the whole nation back in 1992. So cash is blown out, right? It just, yeah. Anyway, besides that, something is broken, right? I don't know what it is, right? What we do know is I'm just going to share this one. This is a scary one, right? One thing that there is no news about, no news, right? If I say certain words, the viewers will drop off and I won't be able to be seen in a lot of locations. But there's been a lot of when two people go poo, 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 right, and then showing they bring their ships in, their military. Huh? There's a key word there. People have a fight. There's nothing in the news about this, but there's been all key movements around the world, from Iran to other locations that we may not talk about on here because I think we can all draw the dots there. There's a sort of potential situation unfolding, with a lot of fighting, right? This would be the least of it, right? It's anyway. So when NUCLEAR is involved, some of these companies, right? That's an abnormality in the stock market, right? That's an abnormality. Why has that gone up? We can see the company, and we can see 468 to 548, right? That's crazy. Right? Why? Why? It's like you've got a special ingredient that's needed for a party, right? And that's interesting there. So, what is going to be the trigger? What's going to be the linchpin that they blame it on? Right? I don't know. I do not know. This I never would have pictured in 2019. Right? I'll put it out there. I was a little bit. I was scared at the start of 2020. I'd heard of illnesses before, right? And I was scared for about a week or two until I saw all the symbols, right? And I saw the symbolism, numbers, right? The 33s and the different things that are put out there. And I was like, hang on a second, they're mopping the floor here. So I believe wholeheartedly that they'll find a way to try and patch up what we have today, but take no no comfort in the fact of what you're seeing out there, because the stats are all lies. They're all lies. They are all fucking lies, right? The CPI is a lie, right? Seriously, 7% or 3%, like who gives a shit, right? Nothing has gone up by 7% or 3%. Nothing, right? Nothing in the last 4 years, right? Since they started printing money, right? They're trying to stop hyperinflation from occurring because it's really bad, right? And they're pushing up the interest rates, and they can't. They can't do it. They've cracked the system. It's broken, right? And it's a stress test blew out of the water. But now they'll come back and say, "Oh, we'll drop the rates down," and everyone will be "Oh yeah, it's the greatest thing ever." But what they're defeating is they're saying, "Hey, we couldn't fight the inflation genie that came out of the bag." So this one here is same outlet again. Breaking news: Japan's stock market, the Nikkei 225, is currently set to post its largest two-day drop in history. This is an even larger drop to the Black Monday crash of 1987 per zero hedge. Now South Korea has halted all sell orders as markets crash. Panic selling has arrived. They're fixing this, right? They're just printing their way through it. They print their way through this, fix it up. They get assets on the cheap is one thing that they do. But secondly, pretend it's never happened, right? But that currency is finding a home. That's going to create more inflation. And it's fake. These things have no value. I got asked at our event the other week, do I diversify in other assets? I'm well diversified, right? If I look at my whole position, property is a part of it, right? There's heaps of other things. But do I go and invest in stock market listed companies? I've never talked about this actually. I actually want to go and buy some companies in its entirety off the stock market, and I've picked a few which I plan on buying in the future, and not because I want to invest in a crash or anything like that. I just want to buy the assets and strip them. And I've gone deep dive into all their numbers, and these companies lose like millions of dollars a year, right? And it's like, who's funding them? Oh, the advertising from this entity is going to pay for this one, right? And they're all just bodgy agreements. All their books are cooked, right? Their books are cooked. So yeah, I don't see the value there. But anyway, here we are looking at bonds, and I'm not talking about MeUndies either. I'm talking about the bond yields, which is basically where money is created from the central banks around the world. I'm just trying to. I printed so many of these screenshots to share with you. It's kind of. I'm confusing myself now looking at them. So we have the 10-year. Here we go. This is from the weekend, right? This is the Australian 10-year bond. So we all know, well, I don't know, I don't think many people know, but the bonds, you go on the news, oh, we've had a little meeting and everyone feels like they've got a control of what's going on, but they don't. The central bank goes in, says, we've had a meeting and it's decided inflation's under control, not under control, blame it on something else. We're going to leave rates, right? So this is Friday. So if we see here this chart, this is from a month. This is a month ago, right? This is from the last month. And this screenshot, I took this on my phone on Friday, and it was 439 basis points, between 430 and 450 basis points. So it's like a 4.3 to 4.5%, which would be on the money for an interest rate of that'd be on the money for an interest rate of 4.35%, which is where we're at up here, right? But then Friday came, and the 10-year bond and the 3-year bond and the other, where's the other one? These are the 1-year bond. Sorry, I don't know why I had my blank. 12 months. These are what interest rates are based on. I'm in the process of getting a loan at the moment, and I'm buying bonds as my loan from a Big Four bank, and they base them on 3-month bonds. Is what I'm paying a bank bill swap rate basically on as my loan. It's not a loan; it's a bond I'm buying, but they buy for me, and I pay my fee, which is the margin that they make as a bank. But anyway, that just shows that as of Friday, it fell to 4.04, and then this morning at 3 a.m., I woke up and I was like, I better check the stock market, right? I fell asleep real early, right? And then this is the one that I screenshotted tonight, last night, and it's 3.88. And if we look at that, from just the last 1 week, we can see that it's fallen from 435 basis points to 388. So that indicates a 0.5% rate cut. That's two 25 basis point rate cuts. Do the maths for you all. But yeah, that's just in a week. That's in a week, folks. That's in a week. The bonds are falling around the world. So they can meet up today and they go, oh, here's some higgledy-jiggledy, words that we can throw around, right? Which we want to talk in language that people don't understand. So we're talking a bit of Latin, and the plebs won't understand what we're saying. But when you look at the facts and the data that they're using, and it tells a very different story. And this day was evident that it was going to happen. And they could very well change this. They could manipulate different levers, right, in the system. But it's telling a sign. It's flashing code red. It's about to fly off a cliff, right? And that will have a massive impact on other areas of our lives. So if we go to the Australian 3-year bond, the 3-year bond is at 3.68%. So if you buy a bond that's a 10-year bond, you'd expect to get a bigger return for locking your money away for 10 years. So you've got a 3-year bond here, 3.68%, which is cool. So we look at that. That was on Friday, and then we look at this one from first thing this morning. There's another 30 basis points off, right? But just look at, like, this is 1 week, right? This chart is 1 week. It was at 4.06% last week. It's dropped 60 basis points in a week. right? Now imagine, can I throw the paper? I'm going to keep it because I might refer back to these charts later. So I know like people like when I throw the sheets of paper, and when I throw them, I'm actually never angry. Like I don't get angry. Like if I got angry, I'd throw the computer, right? I never get angry. If I get angry, it might happen once every 2 years or something. I'll lose it over something really trivial, but I don't get angry. When I throw these things around, it's more for fun. I'm like trying to knock it into everyone, right? It's like, it's crazy. And we look at our beloved 1 year bond, and that's this one. I didn't take that from last night, but that would be sitting somewhere lower. But that was 4.17, and it fell off a cliff from a month ago. It literally fell off from a week ago from 4.4% down to 4.17. So that's the shorter term rate there. So when we have a look, I've sent this to my team and I said, print this out for Tuesday night on Saturday morning, right? This little chart about the losses, right? And so it's $2.9 trillion worth of losses had occurred from the major indices and stock markets, you know, over the fears of global recession. It's the biggest one-day loss since March 2020. So when we look at that, we've got Microsoft, what have we got? Apple, Nvidia, Google, Amazon, Tesla. So let's just read some of these, right? Microsoft down 2.69%, Google down 2.72%, Nvidia down 5.68%, Amazon down 11.83%. 11%, look at that. Not making these things up, right? It sounds like we could have a good story if you were drunk at a party going, oh, well, you wouldn't believe what happened here. Like, it's like unbelievable. JP Morgan down 2.81%. Tesla down 2%. Crazy, crazy. I'll throw that one because I don't care about it anymore, right? Those fond ones I might need. If we look at the banks, Wells Fargo down 7%, Citigroup down 7%. This is on Friday, right? And I don't follow these things too closely now because I couldn't be stuffed. It's all Ponzi, scammy bullshit. Anyway, let's get down to my articles. I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 articles here. Let's have a look at this one. This is like the last one that I had. This old guy. Everyone's like, oh, he's such a nice guy, right? He's got his finger in the pie with the most evil and corrupt organisations and positions, and the level of power that these people have over institutions is dangerous, right? But this came out. This is from CNN, right? Warren Buffett's Berkshire Hathaway cuts its stake in Apple by nearly 50%. They sold out. He sold out. He's like 95. Probably won't get the privilege of seeing this next crash, but just read it. Warren Buffett's Berkshire Hathaway slashed its stake in the tech giant Apple by nearly 50%, according to Berkshire's second quarter earnings report released on Saturday. What perfect timing, right? Here's the other thing, right? All this news, right? Everybody's watching a tranny boxer, right? I don't know, can I say that without the algorithm getting screwed up? A tranny boxer. Everyone's up about some swimmer or some hot chick, the hottest girl in the Olympics or something. You read, I just see this stuff. I just skim over the top of it. And it's like, what? I'm trying to look for little treasure nuggets out there, right? And it's like, this is crazy. No one's seeing this, right? This happened on a Saturday. So did you notice the crash occurred on a Friday and you've got the weekend to fix it? Has anyone occurred that these crashes keep occurring on a Friday? The lights got turned off with the what was it, CrowdStrike, right? What a name, right? What a name, CrowdStrike. They're striking. There's words beyond all of it, spelling, right? They're putting you under the spell. The CrowdStrike is in your face, right? It happened on a Friday. All the computers went down. They're stress testing this market. They're dropping this data. This guy sold his stocks. He didn't sell on Saturday, right? He has to report on it on the Friday, right? Right. It's this week. Let's package it up. Everything's falling. Let's just throw it in there and wrap it up with all the other toxic waste, right? It's happening. It's happening in front of us. I have a quiz for you, right? People, Dana says here everyone's being distracted by the box. I see, the only reason I see it's on Facebook, people, write about it and they're like arguing about it. Who cares? I don't care about any of this stuff. I'm just trying to enjoy my life, right? Leave everything, leave it. Like, I don't want to be poisoned by the toxicity. Anyway, I've got a little quiz here, right? Warren Buffett, richest bloke in the world, right? Would you want to be Warren Buffett? You're worth hundreds of billions of dollars, right? Would you want to be this bloke? Question. Put it in the comment. Would you want to be him or wouldn't you want to be him? You've got the richest guy in the world. Yeah, sure. Surely would you want to be him, wouldn't you? Would you? I don't know. People put, I've seen these little things on Instagram and shit, right? You be this guy's never going to enjoy it. He's going to die soon, right? You can't take the time with you. So just, have fun with everything. Everyone's saying F no, right? Because you want time, you want youth, you want, I'm looking at myself, I feel old a lot. And I'm looking at this guy in my photo and this reflection on the screen. I'm like, I feel good about myself. I don't feel that old now, right? But you want to have $1 billion, let's have $1 billion, you die next month, you die next year, 2 years, go around. There's only a certain amount of things that you can do. He probably wouldn't be as movable to be able to go do the things he'd probably want to do in his younger self. So go and live your life, go do what you want, enjoy it, take advantage of the opportunities. Okay. There's one here. My team has printed it so it doesn't have all this in the plain text. This is an Australian article about it. When I send these articles, I read it and I'm like, wow, there's some real juicy nuggets in here, right? Supersized rate cuts on the horizon after $90 billion share market rout. There we go, right? Bring back the rat style virtue. No, that time's over. That time's over. I will shave my head again. Started this year, I shaved it all off with a blade, and I've been shaving it a few times. You guys didn't see because I didn't do any videos that month, but I'm going to start shaving my head back to the skin. I don't know, I just like it. It's just nice. I don't know. I said I'd get there when I got a certain weight limit, so I did, but then I went back over that. So I won't digress. Key points. Markets now believe there will be an interest rate cut by the end of the year and possibly two. Oh, no shit. The data never showed me that was going to be. I'm so surprised to see that this occurred. The Reserve Bank board started its two-day meeting on Monday. The ASX suffered a 3.74% fall on Monday after a 2.1% drop last Friday. However, an interest rate cut on Tuesday remains unlikely. Well, obviously, I don't think that we've seen a rate cut today. Home buyers could be delivered a supersized interest rate cut before Christmas to protect the domestic economy from a US-led recession after the Australian share market suffered its biggest falls since the depths of the pandemic. So the question I ask everyone, a couple hundred people online, you might be like, well, I don't have any money invested in the stock market. Well, do you? Have you checked your super fund lately? Have you seen, is it invested into Apple, Google, Nvidia, Ponzi scheme, bonds? Go buy some bonds. Look at the arse falling out of the bond market. Your super fund's just a toxic waste dump of mess, right? I don't mean to say that to scare people for their super and their retirement, but I wouldn't want. You've seen Wolf of Wall Street. You don't want those guys managing your retirement. So I think it's important. Go and research. I can't give you financial advice. I'm not here to be a financial advisor. I'm not here to say this, but I'm just putting two and two together. I'm thinking if I'm trapped in one of these markets, I want to make sure I'm protected. Whether it says there's that one. I'll throw that on the floor. Someone just said there, at least the greys will be gone. I think that's why I like it. I think when I shave my head, I'm like, the shorter I cut it, the less greys you see. So that's why I like it. The ASX suffered its biggest one-day fall in 2 years on Monday, prompting the markets to predict the Reserve Bank will start cutting rates by year's end. The concerns about the US and what it means for the rest of the global economy forced financial markets dramatically to change expectations for the RBA official cash rate. And you will see that they'll come out with the storyline later oh, we had to do it because of this, we had to do it because of that, they're never going to get inflation under the wraps. And it was never really about inflation in the first place. They just had to curb the monetary policy because it got too far out of control. But this next time, we're going straight, well, I wouldn't say we're going straight to hyperinflation because I've never seen one. But I'm very intrigued by what may be in store for us, which is cool. Um, so, yeah, looking at it, the concerns about markets, which until early last Wednesday put the chance of an interest rate rise this week at a 1 in 4, now believe there is a 12% chance for a rate cut after the RBA's meeting concludes on Tuesday. I didn't think that there was going to be a rate cut, right? It's too soon, right? It's too soon. If we saw the stock market get closed for the day, yeah, we'd see a rate cut. But yeah, we aren't there yet. This is a 6 month play that we're seeing right now. We're seeing the early stage of 6 month play. George has asked, tell us what is going to happen in the next few months to the end of the year. It's a bumpy ride. It's a bumpy ride. You need to get yourself prepared. And some people say, "Oh, Birchie, what are you going to do? Tell us all to go buy property?" No, don't go buy property. Buy property, but don't buy property. But I know, just like what happened in February 2020, what happened when they dropped rates and they printed all this money and there was money floating around, that I knew that the market was going to get crazy, right? So it's going to happen. So yeah, looking at it, what will happen from it, there'll be a lot of volatility out there. Cash in the next couple of months may be a good thing. Do I think there's going to be buying opportunities out there? The buying opportunities are going, right? There's no crash, there's no a property market crash doesn't occur like that, right? Even if you look at any property market crash that's occurred in history, it just didn't happen overnight. The property market crashes take 12 months because it's just lack of stock selling, forced sellers happening. By the time any of these little paper crashes happen in the stock market, rates will be down to zero. People can't go bankrupt when they're paying nothing on their mortgage, right? We saw that through Corona. So, yeah, there's things that you can do to protect yourself. Just be aware that the cost of your goods is going to go up, right? Just be assured of that, right? And you look at your shopping trolley, and it's made your shopping trolley go from a big bloody trolley that would fit in your boot to a little parcel shelf that'd be 2 bags, right? You literally push around a trolley and it's like a little shelf. You may as well just walk around with your the hairdresser's fucking trolley when you go to the hairdresser and they put the shaver and the shampoo, or you go to the nail, you go get yourself a pedicure, you see the lady down there shaving the dead skin off your foot, and they've got the little trolley with your fucking thing. That's what people are pushing around. They go, oh, I just spent $500 on my weekly shopping, right? You used to get a big shopping trolley for that. Soon you'll have a basket and go, here's $500. It's like you fit in your bag. It's like, be aware of that. Be aware that when inflation really kicks in, toilet paper is going to be the last thing you're going to be worried about. It's going to get wild. Break-ins that are rising and all that sort of stuff. Like, I'm not trying to be Mad Max and, hate the world and make you all miserable about things, but be aware, be alert, be able to take advantage of this stuff. Like, get yourself finance ready, get yourself your finances lined up, get your super fund sorted if you're going to do a super fund. I'm not telling you to do a super fund in case any of the men in black that like to watch my videos come and try and write us letter. But yeah, it's do whatever you need to do. Get your shit in order. Take Steve. People have been scared. Like, you guys are all active and doing things and pushing up your rents and you're investing and buying properties and all that sort of stuff. So people are like, I'm going to buy property when interest rates fall. Whenever interest rates fall, everyone's going to be buying property. You didn't pull your equity out before the rates went up. Now you can't get your equity out. It's trapped into a property, right? You should always be active. What can you do today? What can I be doing? I'm sitting there this week. What can I do to improve my position? Could it be planting a garden? Could it be doing this? Could it be doing that? Could it be, I don't know, whatever. Like, do things that are going to help set you up, because this ain't going to be an easy ride. It's going to get a lot harder in the next cycle than what it was in this last cycle. This one is from the AFR. The ASX is set to fall. US equities extend their retreat. Australian shares poised to extend the losses of the sell-off of global assets triggered by rising concerns the US is heading towards recession, washed across Europe and hit an already nervous Wall Street. The ASX futures were down 64 points, 1% at 6 a.m. RBA policy makers will meet on Tuesday. They're expected to keep the rates on hold, which they obviously did. The Aussie dollar was 2% lower. So yeah, our Aussie dollar may rise over the US dollar, right? Due to the fact that our currency, we didn't budge on the interest rates, right? So that means that when we're buying shit from overseas, it becomes cheaper. So this isn't just like, oh, let's just drop our interest rates. This is currency wars as well, because they're having, if we lower our rates, then our dollar falls, and that means that anything we're importing will go up. And when we're buying the cost of things and buying it in US dollars and converting back to Aussie dollars, if we're not, in step with the US dollar as well, we'll have inflation just from a currency crisis, right? And no one ever talks about that. No one's going to sit on the news and go, oh yeah, they're like, oh yeah, look at this. Kanye West's missus had her tits out today, right? They're not there talking about factuals, right? They're not your friend. This one here I found quite intriguing, right? This one here. They leave symbols, they leave numbers. There's numbers all over these things, right? This one was from I think it was Reuters, investing.com, right? But it's at like 5 a.m. this morning. Stock market today, the Dow in a 1,033-point rout as slowdown fears trigger a sell-off. 1,033. If you know those numbers, you'll see those numbers, and you know that those numbers, when they put them in the media, it's symbolism, and it's like a little nod. Hey, we're in this season now. They put those numbers in there. And I know the media. I worked in the media. I've seen the media. I've been in the media more times than I can count on my hand. And I just know that the little triggers that they go, okay, we're ready to go, right? He goes on to say, same thing, right? Recession. People are going to watch you go, oh, the super fund's screwed, my shares are screwed, the recession's here. People are going to think there's a recession, and they're going to go, well, interest rates must go up because of a recession. And people are going to be mentally retarded out there thinking that those two correlate and like, oh, well, the recession's here, so interest rates must go up further. Anyway, here we go. Someone has put this thing in for me. I think this might be a continuation. This is really good actually, because I'm reading this one live with you. Yeah. Let's read this for a bit of comedy, let's call it. I think this is they put the articles, and the articles continuously update throughout the scrolling. I sent a different article, but it's deleted and left us with this. But August interest rates, RBA makes a huge call on interest rates. The Reserve Bank has revealed if homeowners will take another hit when it comes to their mortgage repayments. Homeowners are breathing a sigh of relief. We're ready for another month. It's all right. We're safe for this month, right? We're safe for this month. Not to raise interest rates in August. Interest rates remain 4.35%, with most economists having predicted that the RBA would hold the cash rate. Deloitte Access Economics partner Stephen Smith said holding interest rates was the right decision for Australian businesses and households as it reduces the risk of recession. Ain't nothing reducing risk of recession. You wanted to reduce the risk of recession, you wouldn't have given us, 14 or whatever it was, rate hikes at once, because it wasn't mathematically possible. With inflation trending down, a weak Australian economy, rising volatility in global markets, Australia needs an environment where businesses can invest for growth. Tell me, what has gone down in price, right? What has gone down in price? I had someone the other day say that they're buying a Toyota Corolla, right? I had to fucking, really go and scratch my head. A Toyota Corolla, can someone write in the message box what they think a Toyota Corolla's worth? And don't go cheating and look up car sales or anything. What's a Toyota Corolla worth in 2024? I'm curious. I'm very curious. I'm going to pour myself a bit of water, right? I'm waiting. What's a Toyota Corolla worth? What do you think? Daniel said 50K. Anyone else going to take a stab in the dark? 30K? Matt, Lucas, Carmen, you're all wrong, right? Melissa said 55. Dana said around 60. Toyota Corolla is selling between 40 grand and $75,000. Yeah, it's probably like some tricked up spec thing. Fucking Toyota Corolla. I've used them as paddock bashers before. Like 70 grand, 60 grand, 50 grand. I remember I bought bloody sports car. I bought a Nissan 370Z back in the day for like 60k. I bought a Nissan GTR R35 for like 100 and something, 120 or something back in the day. A new Corolla. You won't get anything under 40k for a Corolla. So I don't understand where this inflation's dropping. It doesn't drop in a car. They can't sell the cars anyway. I don't see it at my shopping. I don't see it at, anywhere. But apparently it's dropping anyway. The Reserve Bank is walking a tightrope balancing between twin objectives to fight inflation and maximise employment in the economy. The reason why we have the yes, Brendan. Brendan says he bought a Trana for $500. Who remembers when you just drive down the road and you see a half a real estate sign cut off and it says for sale and they shove it under the window wipers and you walk up to it and it says $400, $200 for a car. Right? It's 10 years old, 15 years old. Someone bought it for 13 grand. Now it's worth $300. Crazy. Those are gone. The metal in the car. You crush the car. You take out all the metal, the copper, the steel, the brass, everything, the platinum out of the cat converter. You're looking at like 4 grand just the metal in the car. So the metal in the seats, everything. However, AMP Chief Economist Shane Oliver said mortgage holders were bearing too much off the brunt to bring down inflation. Tighter fiscal policy from the tax hikes and spending cuts, maybe 1% super levy on everyone, but spread the burden. But what would mean politicians would have to do with things politically unpopular? And history shows that they cannot be relied on to do that. So responsibility for controlling inflation should remain with the RBA, and that unfortunately means the burden remains with the mortgage holders. Attempted recession, these things are all. I want to share something with you guys about super, actually, about super in one moment. Mr. Smith said the data showed inflation was not running rampant, but instead the core annual inflation figure had fallen to the 6th consecutive quarter, reaching its lowest rate in 2 years. The factors driving Australian inflation at the moment cannot be fixed through the interest rate hikes, namely rents due to housing supply constraints. Well, they're saying that. Well, inflation's really causing all these things to happen. Right? It doesn't discriminate. They can't stop it. They cannot stop it. Right? They can try it with rent controls. They can try it with this. They can try it with that. But it ain't going to work. It's never worked. It's never worked in thousands of years. Higher interest rates fight inflation on the demand side by subduing spending. Australia's economy is already weak with investment and consumption in the economy too low and with the business insolvencies increasing. I said we'd see zombie companies, right? Zombie companies is something dead and it's still living, right? A zombie company would be all those businesses that are going broke. We're there. I said this in 2020. Surprised. I'll keep going on reading it. I've got another thought on something. Actually, we'll keep reading. I'll park this article for a second though. Super funds, right? Super funds. Let's just think about this Ponzi scheme. How much percentage is the super that? How much percentage is the super that people pay in Australia, right? 9%, 8%, 9%, 9.25%, 9.5%, 10%, 11%. I think it's up to about 10.5%, 11%. All right. So imagine everybody in the country. I don't have this stat. I'm just pulling figures out of my ass here, but you can go and dig down the rabbit hole and find this one yourself. If everyone in the country is earning a wage, let's say they're earning 100 grand a year. Let's say some will earn 150 grand, some will earn 50 grand. Let's just say 100 grand, 80 grand, whatever it is, right? 1%, right? They've just put it up. So Neil just said 11.5. I don't know what it is, 11 and a half, something like that. They've put it up 1%. They've put it up 1%. They've put interest rates up by 2%, right, in the last couple of years. The super fund contributions. So they're taxing everybody's salary. They're taxing you because that could be money your employee could be paying to you, but instead they're putting it into the super. The super, they're taxing you, right, and forcing you to put into this stock market, right? Not just the stock market, but also the bond market, right? So there was money already beforehand. And look at what happened in 1992 when they got out of the recession. They forced everyone to put, thingy bob. They put the thingy bob. I don't know why I call it thingy bob. They put the super in place. There wasn't super, compulsory super back in the day, and yeah, they look at all this, what happened to the stock market back then, right? It recovered. The 1989 crash, 2 years later, there you go. Oh, we must have put your money into super. Oh, suddenly we've got a stock market boom happening, right? Everyone's a fucking hero. We've seen this stock market being fed with a fucking intravenous of a dialysis machine jammed into it, and it's putting the life into the stock market. It's in palliative care, right? It's been there for a long while. But they're being forced. They're forcing people. They're forcing employers to put extra money, and they're forcing you to take a cut, which could be going to you and putting it into your super. Crazy, eh? It says here, globally, interest rates are falling in many economies that were hit by post-scamdemic inflation spikes earlier than Australia. This suggests Australia is a few months behind the global trend of interest rates being reduced from recent highs. I said this a very long time ago. APAC economist State Street Global Advisors agreed the inflation data reinforced the view that interest rates are restrictive enough in Australia. And the next move by the RBA could very well likely be a cut in November 2024. Finance head of consumer research said homeowners were anxiously waiting for the interest rate cut. Give a fuck. I don't know, like, let me know in the comments below, right? Could you care that much about the interest rates going up? Yeah, they're better if they come down, right? But let me tell you all, for those of you that have bought, a 200 grand property rent for $400 a week, your rents wouldn't be going up $50 this time, $80 next time, $120 this time. Like, you wouldn't see those rent hikes if it wasn't for the interest rate rises, right? So they've served their purpose for us as investors too. So just bear that in mind. Like they're saying, mortgage stress, like there's a lot of people out there in trouble, right? This problem's bigger. Like we can just outsource this. We can say, hey, the tenant can pay the extra interest, whatever, push up the rents, whatever. But most families are stuck having to pay that mortgage themselves. Big strain, yeah. Interest rate cuts. Some economists say first cut for 2025, potentially early in the year. It's like they're just, what do you think is going to happen? Oh, I reckon that the Parramatta Eels is going to beat Penrith Panthers on the weekend, and the England's going to miss out on the cricket game, and like, talking about it like it's a fucking sport, based on nothing. A bunch of flops. US economic slowdown. The rate of growth in home prices consistently slowed over the first 5 months. The market continues to see the lowest number of annual dwelling approvals more than a decade. This is PropTrack Director. Despite slowing price growth, more properties are being listed for sale and sales volume remain robust. Stable interest rates are likely to support vendor and purchaser confidence we head into the busy spring period. This is in the US, right? We're seeing prices rise still, right? I know places that they have been, what's it saying? Yeah. I've seen places in Australia, right? Stuff I bought in December 2023 and now in July or whatever, August 2024, they've gone up from like 200 grand to 300 grand, literally 50% increases in 2024. So it says here, calls for rate cuts now by the Australian Council of Social Service, ACOS. Here's a little tip for the media, right? Every time you see something in capitals, right, it's all about the spelling, the words, the pronunciation, and the numbers, right? There's like, they're wordsmiths, right? They're wordsmiths. But so this one here, right? That's an institution. If it's got capitals in it, that's an entity. That's like your name. It's capitals. It's not just saying, oh, the whatever. I've called let's get a glass of water. I need to put some more in that. Said official interest rates went too far last year, of course. These people sound pretty cool. It found since rate rises began in 2022, 75,000 Aussies have lost their jobs. The number of vacancy for entry-level jobs has declined by almost a third, while 60,000 jobs are under threat if unemployment rises to 4.5%. The living standards of people. Look, last couple of years, I talk about all my business mates, like mates that have businesses, whatever. It's like, oh yeah, I'm gonna leave. I can get an extra $2 over here, or whatever the case may be. But we're in a world now where businesses just won't be there, right? They'll go broke. There's businesses dropping like flies. The amount of inquiries when it comes to a job, right? I've got HR departments. I've got hundreds of staff, right? Like I've got hundreds. I don't even know how many hundreds of staff that we have in across all the brands and the businesses. And you know, the amount of good quality applications, right? It's like tide turns, right? And you can tell from these data points that hey, there's a lot of people looking for a job. I'm getting people that I wouldn't have got beforehand looking for a job. You know, it's fantastic on that front, but it's not, you know, it's good for me, but not good for, you know, the rest. So they're data points that you need to look at. And this data, when they show it to you, it's always 6 months, 12 months in arrears. Um, I just had to share this one because it's kind of funny. It's kind of funny. 10,000 California fast food workers are McFired. I could have thought a different word. They're kind of yeah. Thanks to $20 million, $20 minimum wage, right? And this is happening around the world. This is the pressures that are put onto businesses out there, right? Nearly 10,000 Californian fast food workers have been fired thanks to the state's new $20 minimum wage, according to the Californian Business and Industrial Alliance, which named the governor, blah, blah, who cares? The California business have been under total attack and assault for years. CABIA president, the California Business and Intelligence. Once again, like you can see these names, right? They put them in there, right? Californian business, they're businesses, right? They're posting these articles. They have a PR department. That's why, yeah, mate, you're right. You're McFucked, right? According to Manzo, nearly 10,000 fast food jobs have been cut across the state since Newsom signed Assembly Bill in 1287 into law last year. You can only rise prices so much, he said, and you're seeing it. People are not going to pay $20 for a Big Mac. It's not going to happen. Do you remember the time I said, like nearly every week, that you're going to see a Big Mac meal pay off a house? And people are like, oh, you can't see that happen. Well, we're going to see it happen. And it's happened throughout history. And it's like $20 isn't going to pay off a house, right? But that's $20 today. Remember now $5, they've gone to $10. Now it's gone to $20. Then it's going to go to $50. It's going to go to $100, right? And you're going to sound like that old sort of, you're going to sound like that old sort of prick that goes, oh, back when I was young, I used to get 40 red snakes for 2 cents, right? That's literally what's happened over the last 50 years, right? All our elders that have told us these things, we're becoming them because quickly, and we're going to get there very quickly because we're seeing 50 years of inflation in 5 years, and then we'll see 50 years of inflation in 2 years, and the writing is on the wall. Well, RBNZ to do a flip-flop on rates. They're all going to flip-flop, right? They're all going to flip-flop. In memoriam, victims of Newsom's minimum wage, California loses nearly 10,000 fast food jobs. So that's our article. These are some of them. So two Pizza Hut operators are laying off all their delivery drivers ahead of a new state law. Mod Pizza earlier this year, minimum thing, has 500 local things, has closed 5 shops. Subway shrunk its sandwich chain in the US by 443 stores last year, surprise downsizing that experts said could continue. The chain's Californian shops face an increased minimum wage. New York Post, a McDonald's franchise who owns 18 outposts in California, is considering reducing store hours, hiking menu prices, and delaying renovations to offset the impact of the state's $20 minimum. Burger King A businessman who owns 140 Burger King franchises in California will slash workers' hours and expedite the rollout of self-serve checkout to cut down the labour costs in response to the state's new minimum wage. Harash Ghai, who owns 180 fast food restaurants throughout the Golden State, including Burger King, Taco Bell, and Popeyes, told Business Insider last week, "We can't move fast enough to have this rollout. We have kiosks in probably about 25% of our restaurants today. However, there's 75% going to have kiosks in the next 30 to 60 days. Several fast food chains have hiked menu prices since the new law increased." So, and Dana said here, and Matt said here, Carl's Jr. gone bust. Like Rex Airlines, I didn't even have it here, right? The third largest airline in the country. NSET 2.0. Never even saw it. Who knew? Who knew that Rex Airlines was the largest regional airline carrier in the country, right? Who knew that? Who knew that they went bankrupt a few days ago? Everyone's still working out. Is it they, them on the Olympics? Is it like, is it this celebrity over that celebrity? Everyone's asleep to this. Everyone's asleep. It's amazing. Anyway. Food price inflation. Here we go. 2014. What do we got here? You can see that they're really ramping up, right? Inflation. Let's just follow this, right? Here's the chart. Inflation isn't going. It might look like the bottom line, right? But it's looking more like the bottom line that is put there, right? And that means that the tail end gets higher, right? McDonald's has had 100% inflation, Popeyes 86%, Taco Bell 81%. I don't know what this one is. The logo's too shit unknown. Well, here in Australia anyway. Subway 40%, actual inflation 31%. They're saying that that's where inflation's at, right, over 10 years. Right? Oh, that's inflation. But that's the cost of all the food. It's the cost of the food. Who goes to this place? Who goes to this place? I want a nice steak, a real steak, right? Not one that's come from a supply chain. I want to, it has to come from a special place, right? I'm not going to go and, the people that would go to Macca's are the ones who are like, oh, I'll get 4 meals for $20, right? They're going $60 for dinner. We better cook it at home, right? We'll get the, that's anyway. You get the picture, folks. You're getting the picture. Recession fears as global stocks plummet. Stock markets around the world plummeted. Kind of feel like these articles that I've got are, just a copy and paste of each other now. So, but there's some gold in them. Japan, the share index is down more than 12%. Literally, the biggest fall in Japan's stock market since 1987. That's nearly 40 years, 38 years, 37 years, or something like that. Like, that's crazy. I don't have any more words for you, right? It's like, are you not seeing it yet? Like the largest stock market crash in the country in nearly 40 years. The GFC didn't even affect it like this, right? I don't care about this bloke either. Don't want to get into controversy, right? But don't you think when the ear got shot, it looked like a WWE stunt? I don't know. I just don't trust anything that I see. But yeah, I'm not going to go into conspiracy theories here. Yeah, crazy. Bitcoin dropped to 50 grand yesterday. I didn't see what it went to today, but like that's a fair whack that it hit over a couple of days. The alarming downturn has been traced to the US, where the data on Friday showed fewer jobs had been created than expected, sparking fears of recession. We've been in recession for 18 months. They're not reporting on it yet. This caused stocks in New York to fall dramatically. The data revealed from non-farm payrolls increasing by 114,000 in July, the short of the forecast of 175, while the unemployment in the US rose from 4.1% to 4.3%. Over the weekend, Goldman Sachs' recession probability indicator was nudged up from 15% to 25%. Robert Carnell from the financial services firm ING told Sky News, "We are looking at now at what is to be a situation where the market is viewing what's going on in the US macroeconomy as ticking the recession box." The US Federal Reserve decided on Wednesday. It's funny that it was just 2 days beforehand that they met, right? And remember at the start of the year, we did the little look at their schedule and this timeline of when they do meetings. It's not the first Tuesday of every month anymore, like it has been for the last 40 years. It is now, this month this day, this month that day. Let's do it over 2 days. You can gauge what market sentiment's doing, get them off guard, put those dates at specific points, which are after certain things or before certain key dates. The US Fed decided not to cut its rate, which it's held since last July. So it's been on the same point for the last 12 months. Investors have also been spooked by dropping earnings from Amazon, the world's biggest retailer, and Intel, the chip producer. There are some signs, some other bloke said there's some signs, potentially the market's slowing off a little bit. Slowing off a little bit, eh? Is that what we call it? Wouldn't have known. I think that people also spooked by some people on Friday, and you're also seeing the Japanese markets was already closed when that happened. So you're seeing Japan react to those things that happened last week. Call it whatever you want, right? They're happening, right? They're happening. They're all the same things, but they're slightly different, right? Slightly different. After you go digging, you don't just see these on your newsfeed, right? Recession fears in the US sends ASX plunging into the investors. Aussie investors lose more than 100 billion in one day. Fears of recession in the United States, same shit. Staggering ASX drop off of more than 3.5% on Monday puts the Australia on track for its worst 2-day decline since the happened in 2020, the illness that I just coughed at. All the four major banks were down more than 4%, while Wesfarmers is down about 3.5%. Woolworths dropped about 2.5%, and Coles has fallen over 1.5%. Plunge comes with weak employment data. We've already seen that. And then, let's have a look at this one. This one here's a little beautiful one, right? You guys and girls might find some solace in this. There is a good case for cutting interest rates ASAP. Ross Gittins from the Australian Financial Review. What a difference a number makes. For weeks, the money markets macho man have been telling us interest rates needed to rise yet further to ensure inflation would keep falling. But last week, the case went up in smoke, and almost no one thinks the Reserve Board will do anything in this 2-day meeting starting today. The weeks of idle speculation came to an end when finally we saw the consumer price index of the June quarter. It showed an underlying inflation falling to 3.9%. So signs of relief all round. But why had we allowed these misguided souls to cause such much angst? Why had their imitations of death and destruction been given so much airtime? Short answer, because we find our bad news more interesting than good news. But last week's abrupt turnaround reminds us bad news isn't necessarily so. So maybe we should be giving a hearing to those urging the Reserve to do something nice rather than nasty. Let me tell you about a briefing from the economist at the Australian Council of Social Service. Have you noticed that one of the other articles had the Australian Council of Social Service, ACOSS? It's interesting, their names being put out there in the media a lot from all different media sources. This one was from the AFR and the other one was from news.com. So they're two different media outlets getting airtime. Why are they pushing things? Why are they so? Like if I want to go to the media, put something after physically go to the media, find and say, hey, put together a press release or that. Why are these guys putting press releases out all of a sudden? Who are they connected to? Questions. Inflation without triggering recession and high unemployment is narrow because it's rare for interest rate hikes of this scale and intensity not to trigger a serious economic downturn. The Peak Welfare Organisation says the process of reducing demand and lowering inflation is already well underway, and since increases in official interest rates take up to 2 years to flow through to inflation and unemployment, it has called for the Reserve to start reducing rates immediately. Interesting. So June 2024, to start, the number of vacancies for entry-level jobs declined almost a third. Unemployment is still growing. This has occurred only because stronger growth and publicly funded jobs, particularly in the National Disability Insurance Scheme, NDIS, right? Um, interesting where they're creating a new market. So if you noticed back in 1990s when they got here, it just occurred to me as I read that. It just occurred to me whilst I read that, right? So in 1990, when they had to get out of the recession, they created the childcare rebate scheme and they sent the wife off to work, and then the mother got separated from the child and the kid got put into childcare, and there was childcare rebates created, and then there was two working people in the house so they could create inflation and no one would go totally unnoticed. And then they tried to propagandize that and put it throughout all the media, and saying people should have rights, the male and the female in the house, which they had rights, they could drive and all that sort of stuff, without trying to sound some misogynist, 1960s, dude about a female. But the reality is that's what's happened. When you go back through, they created a whole industry, and everyone, it went unnoticed that suddenly both people in the house had to go and work just to be able to afford to live. And now, last time they created the childcare rebate scheme. This time they've created the NDIS scheme. I don't know. I don't have an answer. I'm not saying that they're trying to make people disabled or anything like that, but certainly be a lot of grants out there for people to, certainly a lot of incentives for people to identify as something. So it's my 2 cents on that front. And we're in a world where there's a lot of doom and gloom. They could just print over this, right? They could just print over this, right? And we could sit here next week and they'd be like, oh, the Dow Jones index hit an all-time high, right? Or this has hit an all-time high. Whatever the case may be, they could print their way through this. But fundamentally, it is broken. The system is broken. So where do we run to? What are things to be concerned about? Where will this all go? What do I see happening over the next 6 months? So, the next 6 months, we're literally, if you went back in a time machine and went, this is what I think will happen today, I believe we're in the start of 2019, right? We're in the start of 2019. The rate cuts, when they come through, they will be like June 2019, and then they fell very fast. And no one knew why they were falling fast, but there was a few glitches in the market and a few things that had occurred. And then the property market started to take off, and then there was a black swan, let's call it a black swan event, is when something just comes out of the blue, and no one saw it coming, right? And that happened to be not a black swan, it became a black bat that someone allegedly ate, and the world was turned into chaos on that front, and a new world was ushered in. And what will it be this time? Will it be I can't say the WAR word on here. Will it be something like that? Will it be a fake alien invasion? Will it be, a climate catastrophe? Would it be, I don't know what it's going to be. I don't have the answer of that. Time will tell, and common sense will prevail. And, I think that it's an interesting world that we live in, and you should protect yourself, right? And areas that I'd be looking at is paper assets. Are they the best thing to be having? Rest assured, they're safe because they'll just keep printing and bailing those things out. What about your super fund? Is there something you can do better with your super to protect it? I don't know. Right? You can reach out and we can put you in contact with people to talk about that stuff. I don't want to give anyone advice. I don't give advice on super. I can't do that, right? But I look at it and it's like they've got too many levers to pull. What things can we count on? Can we count on interest rates going up? I don't believe so, right? If interest rates go up, the whole system is broken, right? The whole system is broken. Their job now is to fix and make sure that we don't go into a recession, even though we're in one. They've got to make sure we don't go into one. So would putting up interest rates be aligned with that? Absolutely not. I think there's a 0% chance that they will. I never said that they couldn't put rates up beforehand. I didn't say that they wouldn't put them up. I said that they couldn't. Mathematically, it was impossible, and would see what's happening today occur. Will they put up? It'd be fun if they did, but I don't see any case. I don't see any case. Like it's not even a possibility in my realm of all the data that I can see and all the data points that I look at. When will we see the first rate cut? I personally believe the next meeting will see the rate cut. If not, so that would be September, late September, early October, or it could be November. One of those 2 months, we'll see our first rate cut and the reversal in monetary policy. From there on, depending on how bad things occur globally, we're in a global market, all these markets are connected. It will depend on how fast things fall. Is my concern about property? Absolutely not. I'm as scared about property as what I was scared about in 2020, in February 2020. Everyone was very concerned. I remember there was deals, right? And regrets in life, right? Regrets. I always do what I could do, right? I went and bought 30 motels. I went and bought a beach house and 2 new principal place of residences at that point in time. So, I'm well committed at that point. I wish I bought more, right? I have regrets, massive regrets, that I just wish I could have bought heaps of more stuff. I remember I bought a farm and maybe another dozen foundation properties. And I remember at the time, agents saying, "Oh yeah, we really need this person really wants to get out of a property, right?" And I was like, "What idiots, right?" Because when they print more money, when rates drop, more money is going into the system, and liquidity is going into the system. The debt level expands, so the cash base expands. So debt becomes more worthless because it's getting washed away in the big mix of debt that's out there. The assets get inflated away. So inflation is going to hurt everybody. That is going to hurt everybody in all different aspects. There's no hiding from it, right? But you can try and protect yourself. There's people out there saying, should I buy gold and silver, right? Most people that talk about stuff like I talk about gold and silver. And look, I think there's a very good case there. I love that stuff. Is it something you should go and sell your assets and buy that? Absolutely not, because I've seen this occur decade after decade, and things don't really go up that much. Gold goes up okay. Silver is very volatile. I think they have great upside potential, but they're very heavily manipulated, extremely manipulated, just like a lot of commodities that are out there. Someone actually wrote in recently, because I've bought lots of infrastructure the last few years in the commodity world, and said, "Oh, Nathan, what do you think about nickel, right?" And I'm pretty invested in the nickel. I wouldn't say in mines, I wouldn't say in even motels, I wouldn't even say, but I'm invested in the nickel. Let's say that. And there's some mines closing down on nickel. And let's just think that if you were a car manufacturer, right, and you needed to get the price of your car down, right? Let's just say, I'm not alleging of this to be the case, but let's just assume you were Elon Musk, for example, and you had to sell Teslas and you wanted to make the price of those Teslas cheaper. If silver price went up, copper price went up, nickel price went up, the cost of the goods would go up dramatically, and it means that your cost of your end product would go up. So if you wanted to control the market, right, you would short and push those commodities down nice and low, and then be able to get them cheap. So if you look at somewhere like, say, BHP, and they've got a nickel mine, and they say, well, we're going to close it down, suspend operations, doesn't mean they're closing down the mine and moving away. They've spent hundreds of billions of dollars obtaining a mine, putting all the infrastructure in, and they're in boom season, right? They've got everyone hooked up to this green revolution of crap. Ultimately, they've still owned all the asset in the ground. They're just choosing not to mine it and squeeze in the market because they're getting squeezed from another controlling hand. So I'm not saying Tesla is doing that at all, right? I'm saying that there's powers to be that are heavily beneficial or relying upon Tesla or Ford or GM or whoever, and certain things happen with certain commodities, and there's certain moves of hands that are happening out there that are far greater than my little Western Sydney brain capacity could fathom. And most of us watching as well, like they're very powerful figures. So, which have been doing this for hundreds of thousands of years, controlling commodities. So when we look at things like gold and silver, technically they should be worth more, but are they going to be? They don't bring a cash flow, you can't leverage them, and all that sort of stuff. So, yeah, looking at where to put your money, I'm not even going to even start giving you advice on that. Do I think that? Do I think that? It's interesting you said that, Matt just said apparently the second-hand market for Teslas had tanked in the US due to the big money for new batteries, right? They need to push the value of their sales up. They need to control the commodity. They need to control the resource, which is causing the pain in their system, right? So, and then they get a new valuation on that business or entity that has got improved profits, and then they can go, well, we'll let go of this market over here and let that market do its thing. So it's control and manipulation. I Do I think it is a big question? I've seen a lot of you guys asking, what do I think this means for property? Property prices can't crash like that, right? Property prices, when you see it crash, take 12 months, right? In 12 months' time, this is a blip in the radar, right? Rates will be falling, more money being put in, more buyers coming in, a shift in confidence. That's what I'm saying. This is somewhere between March 2019 and February 2020, where we're at the moment. We're in that point, and we're going to see the biggest crash that you've ever seen. I'm not saying it like a doomsday, all these miserable fucks, oh, we're going to see this fall and that fall, the next thing fall. I'm not saying that at all. We're just going to see a crash. And then we're going to see an influx of liquidity go into the system, stimulus packages. You've seen what they've done beforehand. They will, give little incentives for people to sell their soul and all that sort of stuff. And, sign here, get a digital identity. If someone asks, is it going to go to gold and silver? I absolutely never would see that they'd take it to a gold and silver, because that takes power away. You can't manipulate that stuff. I see use case in it, I see the value of it, but I don't see them ever handing over the reins of power. So, no, I don't see it. I see another fiat Ponzi scheme like we have, but a very sinister one, which would be attached to a central bank digital currency of some format. And they can control you via your ESG scores and how you comply. They'll value the tax level you pay. They'll value the electricity cost you pay, the cost of everything you have, depending on how much meat you eat, and all that sort of stuff. So, do I see it affecting property? It's the biggest one. No, not at all. I'd love it to. I'd love the property market to crash. Like, I get upset when it goes up. Like, shit me not. Like, my team see me on a daily basis. I'm like, I want it to crash, right? I don't want these things to go up. Like, if I was selling property, then maybe I'd be like, yeah, it'll go up, right, and take a profit out. But I just want to collect. I like accumulating. So that's my view on it. Questions, folks. Let's open it up to the question box. I'm going to start reading some of them, putting your questions in here, and let's go. So Matt says here, is it too late for Perth and Queensland markets regarding buying? Seems every man and his dog is buying there. I don't play in those markets. I don't play in them. I play in markets before they take off. I'm not going to give my little secrets away out there. I'm not saying that being smart ass. I'm just going to say it as it is. But yeah, like Perth, I was buying in Perth when you could buy in Perth CBD cheap, right? It's getting very hot there now. The Gold Coast, I picked up 50 properties a month for 7 years, 8 years in the Gold Coast, and per month, 50. And all those people that bought, they've gone up from 150, 200 grand to 5, 6, 700 grand. The rents were $300 a week. Neutral cash flow, ugly, nothing sexy type properties that are now, ready for $700 a week. You buy it for 600, 700 now, rent for 700. Really bad investment. But you buy the property for 200, you owe 150 on it. The rent goes to 700. If it goes to 700 grand value, 600 grand value, that's the whole strategy I've ever talked about in building wealth in property. So you don't want to be getting caught short, because if the property is 600 grand, it's gone from 200 to 600. What's the chance of going to 1.2? It's impossible, right? I wouldn't say it's impossible. Anything's possible with hyperinflation, but the risk is stacked against it. And if we look at markets in years that have gone by, Perth, when it went up last boom, same thing happened. We look at Northern Territory, same thing happened. You look at the Townsville market, same thing happened. So yeah, you just need to find assets of value. They're definitely out there. Um, they're still out there. There's a lot of value to be had. So yeah. Lynn says, do you think property is still safe? It's very excited. And you remember I used to do these Facebook Lives. I used to do these Facebook Lives like sometimes twice a day and every second day and every day. And yeah, it's I'm that excited as what we were back in 2020 when happened out there. So what do we got here? Michael says here, it is in the government's interest to keep inflation high because it can pay off its national debt with inflated dollars, as the debt itself does not increase with inflation. Conversely, it is in the best interest of the middle class to want inflation so that they to be so low so they don't lose purchasing power. Exactly. But if you can play the game that the government and the large institutions playing, I think act, walk, talk, and position yourself like them, you can play at the table. If they didn't create, this is the thing, right? I remember once I did a video and I thanked all the central banks, right? It was just a little 5 minute mock video. I thanked the central banks, thanked all these controlling entities, right? And if they didn't have such a scam of a currency system that we have, we wouldn't have this game to go, well, property is the best deal to be having on the table, right? Because it may not be the best investment if that was the case. But the system is designed for inflation, and the inflation that the government and the large corporations are using to wipe its own debt out is the same tactics that I've been talking about for so long, like at least 7 years ago. I came out publicly and started talking about this stuff, which was very, very difficult because it kind of killed an old version of myself that I can't ever go back to, which was the fun-loving TV guy that used to be out there in the media, because it's a different person that has to talk about this stuff, and that's the fact and the sad reality of the world and the system that we live in. So Matt says here, win, teach our kids to be slaves. And I remember when you posted that on here, you posted that when we were talking about, the house was broken down, the family unit was broken down, the spouse had to go out and work, and then the kid got sent off to childcare, right? They have full control over your children, and they can educate the children with whatever ideals and ideologies that they want to put in their head, which are not really the ideals that you'd want to have, ideology that you'd want to have for yourself for raising your kids. And let's be really clear on, like, when you send a kid to a school and the person that's teaching, and is that the person that you say, yes, if I was to run an organisation and I had the best person to put in charge of this position, was that the person I would put in charge for the job? And if you wouldn't look at that person and say it's the best person I'd put in charge of my children's early forming years, well then there's a problem. But if you can't control that, then we're trapped. And that's the trap that we fall into. I don't have the answer for that. Only answer is to have abundance of wealth to be able to control your child's education, really. So yeah. Matt says here, do you think after the hyperinflation they'll go back to a gold standard, or before hyperinflation? No, they're not going to a gold standard. We'll never see a gold standard. It's a relic of the past, in my opinion. I love it. I'm not saying it in a disrespect to gold or silver, but it's just not going to happen because then they'll lose control. Chris says the applications per job are up from 60 per job last year to over 160 per job as of 2024, probably over 200 now. Exactly. I'm seeing the same thing. I'm seeing the same things. I just saw a message here which was pretty funny, and it's been deleted. It was like, it said ban the didn't say ban the nannies, but I think it had a T at the front of it. But yeah, I can't see it. It got deleted. It might have got shy by posting such flavourful, fun post. But anyway, or it might have got deleted from the Big Brother at FBI book that we're recording this from. But I'm going to leave it at that. I'm going to thank everyone for tuning in and listening, and for us getting a chance to talk tonight. But I may, if I see something that's going to be very wild out there, or very weird, or very important to share with you, be prepared. If I think that we're coming into like crazy times, right, and something big, I'm going to be doing these lives very impromptu. It won't be just a Tuesday live every fortnight or whatever. I'll be filming these things from when they come to the scene. I was thinking about filming yesterday actually, but I thought, no, I'll keep it for today and we'll have a nice session about it. I actually had a different session. I had a guest on today. I was like, hey, let's cancel the guest. I had Charlie from our IR team coming on, and I was like, this is very important. We share this because this is the start of the next boom. This is the start of hyperinflation. This is the start of mass printing like we've never seen. And I could be wrong. I could be very wrong. But I'm giving you my thought. I'm a crazy guy on the internet with a view and an opinion based on results, an opinion based on data, an opinion based on real, actual numbers that are being suppressed and lied and hidden from us. And I could be wrong. I'm not the policy maker. I'm not the one pushing the buttons at the back end. But I like to calculate. I like to look at, and I like to analyse the numbers. And if I'm 100% confident, or even 99% confident that the outcome is going to be a certain position, I'll put my money there. I'll back myself on it, and I've done that over 20 years of being an investor. Going, no, this is what I'm going to do. Whether it be an interest rate rise or whether it be change the market. And I did do some videos back in 2017 where I was very skeptical on certain property markets. And I told people, they've done things with money, right? And 2016, 2017 was a time when I said I was very open, right? It hurt my business. It hurt my business dramatically when I said that, we're going to go into a crash, a massive crash, right? And, I looked at it and we saw the markets go backwards. You saw Sydney go backwards. You saw Gold Coast go backwards. You saw markets going backwards in 2017 when they changed. And that was due to the fact that they pulled a trigger and they made it harder for lending to occur, right? And what they did basically was an interest rate rise, even though interest rates fell, by stopping the lending from going out there, and it impacted a lot of people, and it caused a little mini crash. But they quickly printed, and 2019 we saw them go, shit, we're going in a different direction, and that was about 3 years, and here we are for 2 years where we're going to see a crash. The interest rates, they will not drop the interest rates, go, oh yeah, everything's doing great, inflation's up through the roof and all this, and we're just going to drop interest rates for you. Right? Interest rates will drop. It's like, hey, the system's fucked. Right? So let it happen. It's just a natural progression of where we're at. And I'm very confident. I'm very satisfied. I'm very happy with where it all is at. And when I got asked like 3 or 4 times today, hey, you look very happy today, Nathan. Like, I've never seen you this happy all year. Like, I've been busy, I've been stressed, had lots of things going on this year. But I'm like, I didn't even know anything about it. And I was like, hang on a second, right? I'm in happy season, right? This is where the real things come out. This is where the fun is, right? So get embraced, and if you're not embracing, you need to turn your TV off and go and do the real digging. So yeah. On that note, I do post out a lot of this data as well. If you're watching this on Facebook Live, I'll tell you where to go. It's not like that. I'll tell you where to get information from. And if you're watching this when it's been replayed somewhere else on a different platform, my team maybe can put a little banner on this with a link to it, right? But go and check out birchfeed.com, birchfeed.com, birchfeed.com. It's a Telegram channel. You get access to it. So you just go to the internet, the web search, and type in birchfeed.com. We'll give you instructions. It's free. You don't need to be a cheap ass. You don't need to, go, oh, I'm not going to spend or I'm not going to sign up. It's free. I'm not asking for money, right? You need to sign up so we get your details so then we can go and put you into the system. So looking at it from that perspective, I post in there a lot of these articles, a lot of videos that I never even share out there, right? The videos that I've not made myself, but I've got from other people that I've been watching. And I think if there's some good data in there, and I don't agree with 100% of what people post out there, I might agree with 80% of it, but that's okay, right? Because people don't agree with everything I have to say as well. And it's like, it's important, right? It's like, hey, that's some juicy data and juicy content. And, some of the people that I listen to hate property, right? They're talking about macroeconomics, they're talking about commodities, they're talking about different things. But if I see that there's something very important there, I'll be sharing that with you guys, and it's free. So you can either watch the news, subscribe to Netflix, or watch some of Birchie's feed and find your way through magical adventures of different algorithms going into your social media and learning a thing or two. So Matt just says here, download Telegram app. Yes, you need to download the Telegram app. You need to head over to birchfeed.com, Birchfeed. Make sure it doesn't autocorrect to bitchfeed. I don't know, that might be something different, right? Birchfeed, Birchfeed.com. Not, there's no AU on it, it's just .com. And go and check it out over there and enjoy it. So on that note, folks, I'm going to leave it at that. Excited, embrace it. I think we're on the eve of what I've been talking about for 7 years. We're on the eve of cool things happening. I just got asked here, Nathan, what is your prediction on the current market? I'm not concerned at all. I'm just going to say it one last time, right? I'm not concerned about the current state of events. I'm excited. I'm embracing the state of events. Stock markets, I expect to be heavily volatile, and this is no financial advice to anyone, sell, don't sell, whatever. I'm not being a part of any of those discussions, but expect to see a lot more of what we're seeing, just like what we saw in February 2020, right? Literally the same events of 2020 in February, stock market crashing like 30%, 40%. Don't be alarmed. I expect that we will see that. And then they'll come back in and they'll back it up with trillions of dollars of stimulus packages, cheaper interest rates, and money flowing through the system. That will flow through and it'll create a fuckload more inflation. Right? That inflation will find its way to asset prices, be it shares, your cars, your second-hand car, your commodity prices, property. Everything will be beneficial from that. But when you're sitting there as a consumer or as a business person with cash flow outgoing into these things that are going to cost a lot more, take heed that it's going to be very difficult out there. So if you can try and protect yourself and isolate yourself as inflation is going to be the outcome. It's not going to be, if they did the right thing, and when I say they, I mean them, the central banks, the controlling entities, they would let this system collapse, but they won't, because it would bring down the whole Western civilization as we know it. And you wouldn't have the internet. Facebook would go broke. The investors that invested money into Facebook for their servers to run this, and then over at YouTube when it gets put over, the whole thing will crumble down. So they need to print and print and print. And they do it as long as they can until the currency falls. And the currency always falls, and it's happened throughout millennium. And that's what I see. So just sort of share it with everyone as I see things fit. I'll share it with you folks. If you have any questions, you can reach out to us. You can book a discovery session to speak to my team. You can reach out to us 1300 360 925. Email us at admin@binvested.com.au. Take care out there. Be safe. Bad things are coming. People think that the stock market crash is bad. Who cares if the stock market crash? Who cares if properties crash? I'd love them to crash, right? But they won't. They could, but I don't see it happening. The thing that is more scary is the ramification of the treatment of what they're going to give us, right? And I said this 4 years ago. I said the situation at the time, it was before these things were, when I say these things, like I mean, what's up, Doc? It was before any of that occurred. I said the treatment of the situation would be worse than the situation. People thought lockdowns were bad and business closures bad and this bad and that's bad and economy's bad and houses may not sell and how they're going to do anything, right? But what was bad was everyone goes, free money, $1,000 stimmy check, stimmy check, stimmy check. Everyone's taking this free cash and they're taking it without realizing that that was the trap, because it was the outcome, it was the cure that they created, which caused all this inflation. And they can't stop that. The genie's out of the bag. The blue fellow was on the TV when the Olympics played. We're there, and there's no putting it back in the bottle. It's been released, and we just need to roll with it and enjoy it and take advantage of the opportunities when they come. So, thanks for watching, folks. Take care, and we'll catch up soon. Bye for now.